right. Good morning, everybody. Hope you're having yourselves a fantastic start to the AM here. Happy Tuesday. Doesn't feel like a Tuesday, feels like a oh gosh, who knows? But yeah, hope you guys are having yourselves a great start to the day. Ready to go after what was a very successful trading day there yesterday. And hopefully, right, we can continue compounding and building off of a lot of the momentum, right, we've had in the last, we'll say, week or so. Don't think I've had any red days here in the last 7 or so days, calendar days. So certainly looking to maintain that level of kind of enthusiasm, right? That level of kind of momentum, and ultimately building off of some of the good habits that I have maintained here kind of in the start of Q2. Now, with that being said, right, being in a good run of form, trading well, seeing the market with a level of clarity can often lead to that like feeling of ego or feeling as if, things aren't ever going to go wrong, or to pretend as if another red day is never coming, or can make it harder, right, to accept a losing trade when ultimately, right, accepting those small losses is what has kept me profitable. So I think from just like an ego perspective, right, really need to focus on being detached away from sort of the P&L outcome and maintain my emphasis and focus towards a process-based structure. Being obsessed with the quality of my technique, being obsessed with the quality of my process, being obsessed in managing my losers, right, and closing my winners is ultimately the things that have made me profitable. It's not that I have this like God-given natural talent of being a incredible trader. I'm not I don't have some special skill, right? I don't have some unique characteristic that no one else shares. I am just exceptionally stubborn, and I know I make money when I follow my rules and follow my processes, right? And trade my setups. And I know I lose money when I basically deviate away from the plan and start to make things up here as I go. So, not going to put myself in situations here where I'm rushing things or forcing things or doing anything that would compromise my trading. I'm looking for high conviction opportunities only, and I'll be unwilling to risk any of my capital or any of my even mental capital, I think is a good way of describing it, on conditions that are subpar or aren't giving me a high conviction narrative. Now, if I'm looking at yesterday's trading day, it was an exceptionally low volume kind of grind. Another day of sort of formal consolidation there after a very crazy period of price action over the last, say, week or so. What that means, right? Maybe I'll phrase it a little bit differently, but we have a short week here, right? This week with markets being closed on Friday. And we have option expiration, right, occurring here on Thursday. So we have a little bit of a compressed trading week. We have a very kind of volatile backdrop. And I think just everyone in general is looking to catch their breath. That's fine, right? If the market doesn't want to give me an opportunity here today, I'm certainly not going to force anything or rush anything. But what I want to kind of like remind myself here today, right? Or like almost like have a bias towards is an expectation that markets are going to remain in these conditions until proven otherwise. So we now have, right, effectively 3 days in a row of consolidation on both ES and NQ. And so we're expecting it to be kind of a choppy, fake outy, slow, indecisive, kind of like mixed bag narrative until we get that proven otherwise. And so our objective here with our pre-market prep isn't to try to think, oh, I got to make a ton of money here today. That's the wrong way to look at this market. It's how can I set things up? How can I plan out my positions? How can I plan out my thesis so that I'm taking advantage of the most likely outcome and identifying the path of least resistance? It's kind of a theme I've been talking about here for the last maybe 10 days or so. And effectively, if it's not easy, I don't want it. And what I mean by easy is not necessarily that it's going to be like a $25,000 win in 5 seconds. That for me isn't it. What I mean by easy is looking for scenarios or trades or setups where it just ticks every box, right? It gives me the appropriate setup trigger. I have the appropriate confirmation. I can work backwards to find my ideal stop loss. And then I'm finding my entry price based on my position sizing and risk reward requirements. If it ticks all of those boxes, that's an easy trade because I don't have to start thinking about applying an exception. I don't have to think about, oh, do I do this technique here? Do I do this technique there? And I can avoid effectively confusing myself on what I believe to be kind of strong, high conviction PA. So again, right, today I'm looking for that easy trade. I'm looking for that scenario that matches all of my rules. And if I do get that trade, right, then it'll be just like yesterday. It'll be just like Friday, right? It'll be just like Thursday. It'll be just like Wednesday. It'll be just like Tuesday, right? It'll be just like Monday of last week where we found our winners, we made our money, and we put ourselves in situations where it was easy to be green. So just to kind of cap things off here, right? It's understanding that in choppy price action or kind of slow price action or in consolidation, very easy for us to get tunnel vision on price action that really isn't there. And if that's the case, right, or if that is the scenario, then I don't want that trade. I don't want the trade that is going to cost me more mental capital. I'm not interested in the trade that's going to be a high probability loss just so I get the feeling of having action on. And so I want to be very disciplined and structured in my prep here this morning. So I make it easy for myself to identify what strong looks like and then know what high conviction opportunities are. Effectively, the next 22 minutes here are the last 22 minutes here of the trading day where I have the opportunity to remain objective, right? Once the market starts moving, once I have a bias of wanting to make money with the trade, start to look at things from a slightly different perspective. So it's very important that we, have a really structured and solid plan, and we just put ourselves in places where we can execute our rules and kind of stack up those wins. So with that being said, welcome everybody. Hope you're having yourselves a fantastic trading day, strong morning, and are ready for what should hopefully be a strong session. From an economic calendar perspective, relatively clear here this morning. And hopefully, right, that again makes it just a little bit easier for us to get that consolidation breakout. So, okay, all that being said, let's start mapping things out here. Let's figure out what we want to do this AM. Let's freaking crush it, guys. So what's the count here on ES? Let's start there and let's figure it out. Yesterday's price action, you're saying that's an inside bar? Right? An inside bar would be if yesterday's price action was fully confined inside Friday's, right? We made a higher high and a higher low outside of Friday's range. Now we're still consolidating here inside Thursday's range and effectively Wednesday's range, but yesterday's candle is not an inside bar. It is a 1 for 3 here, just like Jack is describing. Spot on, right? And it's not going to change too much. We are effectively looking for that consolidation breakout here this morning. I don't think I need to really change these levels. Everything pretty much remaining the same across the board here on ES. So we're in pretty good shape. All right. The old NQ. How are we feeling? How are we looking? What do we think? Yeah, same story, right? Yeah, spot on, Ajay. 1 for 3 here. And so again, we're not really needing to change too many of our levels. We'll go like 19.3 here as our starting point to the upside, and then to the downside here, 18.8. Again, I don't need to change too much. And let's see if this thing wants to rock and roll. Generally makes sense here, guys, on the indexes. That generally makes sense. All right, awesome. Okay. CL, what's the count? What happens on Thursday? What does that mean? Yeah, it's probably still okay for us to trust it today. And then maybe tomorrow we'll probably see the primary roll volume. But yeah, definitely something to be aware of. I will call this a weak 3 out of 3, right? It's a weak candle shape and it's increasing but not outlier volume. Well, I'm not like super enthusiastic about this. Still kind of looks like formal consolidation here inside that Wednesday, Thursday range. So I would be looking for separation either over or under for me to get that look. Effectively can play this in either direction. Wouldn't be too surprising. This 3 for 3 doesn't invalidate any of that buying pressure. And so obviously just kind of looks like consolidation until proven otherwise. As for levels, I still think that 63 here to the upside makes sense. And then to the downside, 60.50 would be the starting point. So again, not too much for us to change here. And then, yeah, just worth noting, roll on Thursday. All right. Apple, 3 for 3 here to the downside, filled that gap. Cool. Tesla, 2 out of 3 without volume. Cool. Microsoft, 1 out of 3. Amazon, 2 out of 3 without volume. So if I'm already looking at some of our leading names, what's the story that they're selling us? Or yeah, I think that's probably the right way of describing it. If we're looking at them, are they telling us huge trend or are they telling us something else? Yeah, it's telling us kind of consolidation, right? And generally, it's a pretty consistent narrative across the line. So it might not be the story we want to hear, but having that consistent narrative should make it easier for us to get that trending kind of bit of conditions once they do sort of behave in the appropriate way. So, yep, voice crack there, not sure why. But yeah, certainly setting up for us to get a nice bit of PA here once narratives kind of sync up or sync up in a singular direction. If they want to chop, that's fine. Going from there. So yeah, Alex, that's exactly what this NQ1 is, right? So we did our prep there for NQ, ES, and CL. Those are the 3 primary tickers that I trade. And then I use the leading names to basically judge how strong those indexes are. Okay, AMD, 2 out of 3 to the downside with volume, or sorry, without volume. Nvidia, same thing, 2 out of 3 here to the downside without volume. Meta is technically a 1 for 3. Baby gap up relative. Netflix, 1 for 3. Going into earnings on Thursday, so probably worth avoiding this. And then Google, same thing, 1 for 3, higher high, higher low. And then VIX hanging out 30.28. So a little bit of a lower range than what we've seen here recently, right? We've got a range in the like 1.8% range, right? Where yesterday we had about 2% of implied volatility. Today we have a little bit less than that, but still an extremely elevated environment, and certainly an environment, right, where, for those of you who are trading options are going to be exceptionally expensive here, and I would avoid that, right, as much as possible. You're just going to need a really oversized move to get paid out here on anything, and I think we can do better than that. So, yeah, any questions here, team? Everything kind of makes sense. How's everyone feeling? DTR guests, everything kind of makes sense to you guys here today? Yeah, hopefully we have a good day here again, Ajay. Absolutely. And again, right, emphasis on losing small, control the variables we can't control, and just allow everything else to be, right? I can't control how the market reacts once I'm in a position. I can only control my reaction before I enter and after I enter. I can't actually control the movement, right? So I'm not putting any emphasis on trying to get the biggest win or anything along those lines. I'm putting all my emphasis on making it easy for me to win. And the easiest way for me to win is when I take small losses and when I close my trades as my P&L is increasing. If I am forcing myself to effectively close at 2R, 3R, 4R, 5R, right, a multitude of my risk, then I need a win rate of like 30% to be wildly profitable. And that gives me a tremendous amount of margin for error so that I can make mistakes. I can be an idiot, right? I don't have to have a good pulse on price action to be profitable. And then when I apply my edge, right, when I apply the skill I've developed, right, in trading the markets, that's when I can really start to compound and create that sort of positive relationship for myself so that I start to make pretty good money. So there is no profitable trading if you can't take losses, and there is no profitable trading if you demand that big wins turn into monster wins or mega wins, or you make decisions based out of greed. So today, right, we're making decisions here based on our system, based on our technique, and we're going to emphasize or obsess over the quality of our decisions, not the quality of our P&L. Our P&L is a lagging indicator for our ability to be able to follow our rules, right? And the more that we trust our technique, the more that we trust our system, the more that we play the game properly, and yeah, can go from there. So, yeah, hopefully that makes sense, guys, right? We have to improve our technique before we improve our P&L, and we can't trick ourselves into compromising our technique just to rush, right? Just to rush a number or to feel like, ooh, I'm a winning trader or whatever. I've never felt as if I have accomplished my trading objectives after a singular trading day or a singular trade, but I've definitely made myself feel like an idiot and set myself back after a bad kind of run of impulsive trading BS. So I hold myself to a higher standard. I hold you all to a higher standard. And I believe, right, and I trust that you all can implement these techniques and take accountability for those decisions. And when you do, you will be tremendously successful and you will be a fantastic trader. The more that we try to skip those steps and optimize for P&L, the longer it's going to take, unfortunately, right? So the only way to win this game long term is to be a process-focused lunatic. And when you are, the P&L takes care of itself, and the P&L will start to compound a lot faster than you think. Any questions here, team? Everything kind of makes sense. Kind of a quick prep. We didn't have to change much here today. Everyone feeling good? All right, team, fantastic. So we got about 8 minutes here till market open. I'm going to go just take the dog out for a quick little jaunt outside. And then I'll jump back on here in a couple minutes and we'll kind of shape things up from there. Yeah, looking forward to what should hopefully be an interesting trading day. And let's absolutely crush it, team. So I'll be back in a couple minutes and we'll wrap it up then. All right, everybody, right? So in general, we're seeing kind of consolidation across the board, and we're looking for a consolidation breakout here today, right? Two ways that we can visualize that consolidation breakout or have some sort of conviction, right, that we have a personality change here in the markets. One, we make higher highs, lower lows, right? So we break out from sort of this range. In general, right, the breakout to the upside, probably a little bit easier to occur for us than a significant breakdown here to the downside. Not because of anything other than just the difference, right, that price action has to make. For us to really be considering trending conditions here back lower, we kind of have to get under that like 4882, sorry. So a lot of work to do, right? Whereas if we're going to break out from that Wednesday range, we have less work to go. Now, still quite a bit of space, but yeah, certainly something there. And then the other way, right, that we can indicate a difference in trending price action is by establishing a larger volume momentum narrative, right, or seeing a higher amount of buyers or sellers than what we saw there in the previous day. And yesterday being one of the kind of lowest, most pathetic volume days here of the year, that shouldn't be a particularly big standard for us to have to overcome. And so let's see if we can get some of that cooperation here to indicate a, we'll call it change, right, or shift in market personality. Until I see that, right, it's going to be hard for me to want to be aggressive. It's going to be hard for me to want to like take a million trades. And just understanding that on these days that you do get that tunnel vision, right, on price action that isn't there. Those are often like the most dangerous of trading days where you end up just like chasing stuff in both directions that ultimately isn't successful. So today, right, if we want to be honestly excellent traders and really putting ourselves in a good situation, then we need to focus on being proactive, not reactive here today, right? And being proactive also means, right, that we understand what the market conditions are like and that we don't try to basically put like a square peg in a round hole. So, hey, do expect for us to have some opportunities here today, but not expecting it to be like a 30 trade day. Ideally, it's kind of a one and done type session. And hopefully, right, we can kind of kick things off here with a bang. Like I said, I think it's been 6 days or 5 days of consecutive profits here. So I'm not going to allow that to influence basically how aggressive I am. Just because I've been making money here in the last week doesn't mean I'm guaranteed to make money here today. The reason I've made money, right, has been because I have followed my rules and I've been rigid with my process. And so the emphasis is going to continue to be on those elements instead of trying to like, yeah, just pretend that my shit don't stink. So I have a lot of evidence here from the last, say, 10 days, right? That being disciplined, that being structured, that following my rules ultimately makes me money. And I have a lot of kind of evidence, right, in my past trading history or even working with other individuals that when we break our rules, we just put ourselves in situations where it's easy to be red, not easy to be green. So we want to stack the cards here, the deck in our favor. And if we're able to accomplish that, yeah, we're going to be killing it. If we choose to ignore those processes, I think we're going to struggle here pretty exceptionally. Make sense? Yeah, it's a work in progress, Vinny, for sure. But I do have to say that there has been a tremendous improvement in how burnt out I feel or how not burnt out I feel by being a little bit more obsessive over the like controlling my mindset. That for me has been a huge blessing. Okay, so we have an opportunity here for a CL reversal. Again, I'll probably default to wanting these on slightly longer time frames. Yeah, I think honestly what it is, Benny, right, is like when I'm more proactive in protecting my mental capital, it's 10 times easier for me to follow my rules, right? Because there's no like panic or rush or fear or anything along those lines, right? That's influencing my decisions. I'm not putting myself in a situation where I'm like preparing for an all or nothing type play, right? And so I think just from like a pure P&L perspective over a larger sample size, easier it is for me to follow my rules, easier it is for me to make money, right? And the less, call it pressure, right, I put on myself to be profitable every day and instead be perfect on my process every day. Like when I flip that switch on which I judge myself, then I get a lot better long-term results. And I think that's ultimately really, really important, right? And I think also selfishly, right, the more that I focus on protecting my mental capital, generally, the better, or like the more fun I have in the stream, right? I enjoy that process ultimately a lot more. I look forward to trading every single day. I don't feel like a pressure or a stress or whatever. And it keeps the game really, really fun. And ultimately, that's why I love trading. For me, trading is the most fun thing I've ever done in my entire life. It's a thing that I am ultimately the most passionate about. I literally fell in love with it the first time I saw it. And I think treating myself with that like element of self-love, right? And being proactive there instead of being reactive puts me in situations where I can give the game the respect that it deserves and I can maintain my ability to keep playing. So we've talked a lot over the last I don't know, maybe month or so, effectively over that, right? And yeah, I'm very happy with those changes. I'm very, very happy with them. I'm constantly reminded that the more that I control my reaction to things, the more freedom I generally experience in my life. And so it's extremely liberating to feel that way. And I think the emphasis or the foundation of gratitude that we've been putting a lot of energy into has made a tremendous impact as well, because I'm not starting each day expecting a mega win or a worst case scenario or whatever. I'm just happy that I get to sit and play and share this experience with everyone. And so from a quality of life perspective, I don't think it gets much better than that. So I get to spend my days, right, pursuing my passion, pursuing the thing that I love the most. And then I get to share that experience with you all. And I find that to be extremely rewarding. So the gratitude is something that I cannot take for granted. So far, so choppy. Nothing too crazy going on here yet. And markets are kind of just figuring out which direction they want to go volume-wise. And not great, less than yesterday's open. So not a huge indication, right, of a change in market dynamics. But I'm going to maintain my patience here and not force anything, right? Got like a 90-minute to 2-hour window where I expect things to be pretty aggressive here. The less volume we have, maybe the less aggressive that period will be. But yeah, let's cross that bridge. This is maybe a little bit off topic. I got an email yesterday from someone, and they'll remain anonymous, but they're basically complaining that they don't have the time to sit and watch the markets all day. and don't have the time to be able to commit all this effort to the charts. And I laughed because they sent that to me yesterday when we made our, $600 before 10 a.m. So it's like, if you don't have the patience to watch the market for 30 minutes, then all you're doing is setting yourself up, right, to force trades that aren't there. That cracked me up. Yeah, exactly. Yeah, they've got the desire. Wow, it's not even effort. Like, so yeah, it's just understanding, right? We need like realistic expectations, right? I was watching a video on YouTube someone sent me yesterday. A friend of mine sent me this, and it was like some steroid gym user. I don't know why I included that, but so some gym user who was very aggressively day trading with 500 to 1 leverage with Bitcoin. And in his 1 hour video, he magically found $100,000 to trade with each time. Oh man, like fugazi. No trades here yet this morning. Nothing yet. I will always let you guys know when things are setting up. If I'm in a position, I will write it out here on my screen, and I'll tell you what my entry price was, what my stop loss price is, and how many contracts I have. And we'll also box in our trade so that we're identifying all those elements before it ever comes to it. What I will say in general here, right, is when I'm about to take a trade, it won't be a surprise to you. I'll tell you where I'm going to be looking for my entry well before it ever happens. So we'll all be able to execute at the same time. You'll have all the information you need before we ever click submit. And this is just like a general word of warning, right? For those of you who got your free Top Step reset yesterday, right? Top Step offered them out to everyone who had an active evaluation account. If you got yourself a free reset, don't use that like as a trick in your back pocket to be more aggressive here today, right? Just stick to your rules, follow your plan, right? Play the numbers game, and it'll all work out. If we ignore it, right, or whatever, then we'll struggle. So, Ajay, I'll just check the email. They sent it to everyone who had a current subscription or whatever you want to call it. So they would have sent you an email with it yesterday. I love that, Samuel. Yeah, very, very calm start to the session here. And again, kind of like, I think a lot of the reason why it feels calm, yes, the classical music, the chilling with your animal, I mean, that is fantastic, but it's that we were very proactive here in our prep. I think Apex, Top Step, and My Funded Futures all did it, Joe. So they saw, I don't know who did it first, but yeah, kind of a consistent story across the line. Yeah, I think, Samuel, just to finish off, right, the reason why today feels calm is we knew that from our pre-market prep perception, right? We're really focusing here, right, on being structured. Hey, Deb, no trades here yet. If I ever place a trade, right, you can take a look inside the setup alerts channel. I will always post stuff there if you're late, but no trades here yet. Yeah, not a good enough standard here for confirmation, right? We have that increasing volume, but it's a candle that looks more like least bullish than most bullish. So I'm going to be pretty patient. Oh, even trading view slow this morning. Excuse me. Just slow and showing me that volume. What's going on here? Like what, a minute? This could be an issue. Yeah, for now, no active even setups really. That's fine. Yeah, no worries, Abraham. Good to see you in here, man. Good to see you. So maybe have an opportunity here for a fake out setup. Let's see. Not yet. Again, remember, team, as a reminder, we get paid for our decisions, not our time. I had 4 days last week where I was able to place a trade, and I still made over $5,000. So I don't have to force a decision here today. If I don't get a trade, it's not a big deal, right? If something doesn't neatly follow my rules, I can't hold it against myself when it gives me a big move, right? We have to make sure that we've got realistic standards, right? I only make money when price action follows my structures. I only lose money long term, right? If I need P&L validation to feel like a good trader. So sometimes things aren't going to follow your rules. Sometimes you're not going to get setups. Sometimes you're not going to get stuff that matches all your criteria. And on those days, we can't feel as if we were owed money or as if we were owed a win, because it's simply not the reality. And you have no long-term evidence to actually support that thesis. So if you have to sit on hands, that's a lot better, right, than losing $1,000. And it's only 9:46. We have lots of time here before, right? We're going to say that it's a dry market. So the reason I trade the mornings, Vinny, is because my win rate and P&L was significantly greater in the mornings than it was in the afternoons. A couple years ago, I'd be streaming from 9 to 4. And yeah, just ended up not either getting a ton of action in the afternoons or like action that wasn't worth really watching. Like the way that I trade, right? I'm effectively trading momentum concepts, and momentum is strongest at the start of the day. So just stylistically, it's the best match for my style. Well, I will definitely say for sure that running the stream from, yeah, like 9 to 4 and then doing one-on-ones and stuff like that contributed to me feeling very burnt out very consistently. Like I love being self-employed, but I'm not self-employed to work 16-hour days or 14-hour days or 12-hour days. And so I found that to be very exhausting. So I think to a certain extent, right, it's that you start making worse decisions once your mental capital is drained. And your mental capital draining can compound, right? So I think like, yeah, the more hours you have in a high stress environment, the more likely you are to make a stress induced mistake. Even when I was trading institutionally, and look, there's a lot of survivorship bias, right? Which is kind of the point that I'm getting to. When I was trading institutionally, like I did the vast majority of my trading uh, within say like the first 90 minutes of US Open. And then it'd be just like trimming positions or taking profit off in the afternoons. Very rarely would I be building up or opening up big positions then. So I've almost like been trained to have like a morning bias to a certain extent. And when I look at my results of just trading the mornings, I'm pretty happy with them. So I don't feel like I need more. And that for me is like kind of an important thing. When I'm thinking about sort of like the chapters of my retail trading career or like my trading career where I've been trading independently, I think that the more that I optimize for like general freedom instead of optimizing for P&L actually leads to a better P&L process. And I do think that to a certain extent that goes back to sort of like the mental capital reserves. Because when I'm optimizing for freedom, right? And okay, I have a not so great trading day. Like I can go for a hike at 1:30 in the afternoon, right? Or I can go play around the golf or go to the driving range or go for a run or I don't know, go to Costco when no one's there. Like I can do things that feel like a win, right? Where I can finish off every day with a win because I enjoyed my day. And I think that removed a lot of pressure on needing to be profitable every single session to feel like validated that I was doing the right thing. And one of the things I actually love doing for myself after a red day is having that to be like the day where I'm most spoiled. So it's not like I'm buying a Rolex watch after every losing session or something along those lines, but it's like have a really nice meal, watch a movie, go for a run, like remind myself that I actually have a pretty good life and just like find a little way to win and finish on a positive. Um, yes, mean reversion can happen at any time during the day, but based on the general market conditions that we're in, it's a low probability mean reversion day. Like the setup we took yesterday, Ajay, right on CL. Um, is that was a signal that occurred on the second candle. Don't know if I agree with that. John, I don't really trade gold. Not because I can't. or because it's not a good asset class. It absolutely is. It's just that honestly, I just haven't back tested it, and I haven't put in the effort to study how successful my strategy would be on gold. And so I wouldn't want to just trade something without that information. And the process of back testing something, it's going to take me a really, really long time. You guys have seen the process of me back testing the mean reversion technique and basically stress testing it, and how that's taken me effectively a month, maybe even a little bit longer now. So I have less, I just don't have as many incentives to trade gold. Maybe that's not a great answer, but it's a lot of work, and I'm not sure if it's work that's worth doing. I feel like I get plenty of action. I'm happy with the amount of trades that I get on average a day, and I'm happy generally with my P&L. So I will look to add more tickers or more tradable names if those things start to deteriorate or I find a better edge somewhere else. Realistically, because I've been trading US-based indexes for pretty much the entirety of my trading career, it's going to take a lot for me to switch asset classes. I would be more interested in finding a different setup trigger if the one that I'm working or using stops working. So with NQ here, I get what you're saying, but we didn't hold above that previous candle here. So I'm going to say that that isn't a strong enough shape. So I'll pass. Yeah, can you pass Top Step in 2 days following my live streams? What's my insights? Yes, for sure you could. You could also fail it within those 2 days. It's really going to depend on what your position sizing is, how much drawdown you have left, and which account you're trading with. Just because you can pass in 2 days doesn't mean that should be your objective. So it really, really depends. There's a lot of variables there. What account size are you trading with? A 50K? So that's fine. That's reasonable. Look, you absolutely can. You absolutely can pass it, but you need cooperation from the market, right? And we need to get some nice active setups. I would say based on what I've seen here so far today, I'm not expecting to get like a 600-point rally, right, in any immediate kind of capacity. So you need cooperation. You need a little bit of luck from the market. And yes, you can. Would I say that that's like the most likely outcome over the next 2 days? Probably not. Last week, for example, on my 150K account, I made 5K. 5K in 4 days. That'd be about, 65% of passing 150K evaluation. So if you could do it in a week, if you could do it in 2 weeks, that's a really good result. So I wouldn't, to kind of go back on some of the things that we've been talking about here this morning, right? I wouldn't trade with the feeling of, hey, I need to get 2 good days in a row so that I can pass my eval. I'd be thinking, if I follow my rules for the next 10 days, for the next 15 days, for the next 20 days, and I just execute my process, then I'm going to not only pass an eval, but I'll get my first payout too. So we want to make our decisions effectively on a day-to-day basis, like delayed, right? Delayed that gratification. So how can I behave so that I'm likely to get the outcome that I actually want? And how could I make that inevitable instead of immediate? So it's more about emphasizing the inevitable instead of the immediate side of things. And yeah, the more that I control my processes, my emotions around rules, my reactions to price action, the more inevitable I make it that I'm going to make money. And if you stack up enough of those days here combined, then yeah, you'll pass your eval no problem with that risk, and you'll get to your first payout too. So I would, in general, like a rule of thumb for trading, right, is what feels best for your account in the moment is rarely what's best for it long term. And the more that we can delay that gratification and think in second order consequences, the easier it is for us to get a nice oomph. And by oomph, I mean payday, right? Dopamine release, right, for accomplishing an objective, doing whatever. So forcing ourselves to slow down actually will speed us up oftentimes as traders, because we're not going to get any of those like singular blow up days where we have to start from scratch or make back a huge loss. So for me, that's the thing to obsess over more. And then the P&L will take care of itself. Okay, so we have increasing outlier volume here on this 3-min. Took a little bit of time to develop. So we can look for that red to green reversal. This would be a short here, right, that we're looking at. And let's see where this thing finds some support. We know that this would have to be the aggressive entry technique here already, right? Because this immediate candle made a lower low under our confirmation. We want to see this move sustain right at this point versus anything else. Why can't go in here? So stop loss, right, would be for now, right, 1988.50. Might change here, might invalidate us. Okay, we're still within striking distance. So stop loss, right? 19091. And then we need to see it break down under that blue line, right? So under our confirmation candle low. And then an entry would be like 66 or better. So right now, not behaving as if this is going to be an easy short yet. And this would be a one contract play. This would be a one contract play. Yeah, I mean, that's a good looking rejection. But it's bouncy at this level. Very, very bouncy. But like it's definitely been more elevator down, stairs up than elevator up, stairs down, if that makes sense. Oh man, Trading View, why are you so slow today? What's going on? This is Fugazi. Oh man, I might lose my mind here if Trading View is going to behave like this all day. All right, let's hope it doesn't come up to anything P-Hub. Don't appear to be behind. Okay, so CL, maybe I can get that downside look here. High volume rejection, right? Strong candle shape. Stop loss would have to be 54, so well within my max loss number. Nope, I will let you know when I'm in a trade. Like I said, right, I will write out my position here on my screen, and we will box in the trade so that you know what my stop loss is, what my entry size is, right? It will not be opaque. It'll be exceptionally clear, right? So I will tell you, okay, looking for an entry, here's my stop loss, here's my entry target, here's all that stuff. We've not had any of those types of discussions here yet. So no trade. I will never hide it from you guys, right? I will never hide it. So don't look for stuff that isn't there. Okay, so for now, right, boxing in this trade, stop loss would have to be 73 as is. My entry on the pullback, right, would be 63 or better. If it gives me the aggressive entry technique, right, then we'll flip it up. But for now, we're looking at a pullback entry, and we're looking for a pullback short above 61.63. So my stop loss, right, is going to be this red line, 61.73. My limit price that I'm setting for my order short is going to be 61.63. I'm going to have 5 contracts. That clear? And if this thing breaks down, right, makes a lower low under 61.50, then I can use the aggressive entry technique, right? Risking about 8 cents. Oh, short. Okay, so watching this reaction here, right, as we creep up towards that 61.63. And I'm looking, right, for this green candle to behave as if it's exhausted at that price level. So what does that mean, right? That means that it struggles to like bounce off of that blue line, right? Bounce higher. Like it touches it and then it's like it hits a wall, right? That's kind of what we're looking for here. So I've got everything set up here in my order window, right, team? I'm not trying to put this together here now. I'm already ready to go. I'm already set up. I'm already doing whatever. So now I'm just watching to see if I get the correct reaction. So I can click submit. So let's watch here, right? We're at that zone. Hey guys, so I am in average price. I got stopped out. I was in at 61.65. Oh, couldn't even write it out. That's okay. And now we're back to looking for a breakout here to the upside. That was a short, right? If I'm boxing in my trade, the red line is my stop loss, right? So if the red line is at the top, then that's a short, right? So my stop loss on that trade was 61.73. I want to be able to buy 5 contracts. I know that one contract is $10 a cent, and I'm 10 cents away. So I'm working backwards from what my stop loss price is, right, to be able to get the appropriate position sizing that I'm looking for. Right? So that 61.63 is the area where I'm risking $500 or less. Right? So it's find your stop loss, find your profit target, find your spot inside your risk reward zone where you're happy with the max amount that you're risking. Okay, so now, right, red line is at the bottom of my candle, so I'm looking for a long, right? with a stop loss of 61.72. And I'd be risking about 7 cents. We're looking for a gentle pullback here into 79 or so, which is my confirmation candle high, right? That's how I chose that line. And I know that inside that spot, right, I can risk less than $500 if I buy 5 contracts. Okay, so watching here carefully. Right, and at a 79 entry, right, I can buy 7 contracts and still be within my max loss number. So watching carefully here. Not really respecting our confirmation candle high as a zone of support. So my hands are crossed. I'm not clicking submit. Okay, so still watching here. And if this thing breaks out here, right, then I can play this on the 5 min, push my stop loss to 77, and then look for an entry around the high of this 5 min candle, right? So around that 83. Maybe seems a little bit more likely now. Again, looking for a long here, stop loss, red line, 61.77. Now we're back to watching it here on the 3. Okay, good decision, right, to have not taken that trade here long yet. Been a pretty catastrophic shake and fake. That was a bearish reversal signal here on CL. That's what that ding was. That was not an entry. Okay, so watching NQ instead. Probably the slightly smoother looking bit of price action. So stop loss needs to be 66. And again, right, red lines at the top, so I'm looking for a short. Wow, what a dump here on CL. Okay, so again, now watching NQ here. 5-minute time frame, right? 5 minutes. You can see that here. Okay. You're looking for a stop loss 74.25. One contract play, looking for a gentle pullback here. No chasing, guys. No chasing. All right, guys. So I am in. Average price is a stop loss. That's the theme here today. Okay, fine. And I took a $200 loss there. Potentially try this again. That's some violent chop. 986.75 would have to be the stop loss. Trades I've been stopped out almost instantaneously. Okay, so still watching here for a possible short. This would be then the pullback entry technique. And we need to get within 25 points, right, of our high, or our stop loss high. Approximately that 42.75. Right, approximately there, that blue line. And again, team, right? I've kept my losses very small here so far today, so that I can play the numbers game, right? I am less than one trade away from still being green. This is not the moment to panic or to overcorrect or to rush something or to compromise your process. Do not fall for the impulsive decision to try to make back your P&L. Follow your rules, stick to your system, right? Manage your position sizing, and you will make money. You're not optimizing to make money on a singular decision. We're optimizing to make money over the course of hundreds of trades. So if we make each result feel personal, either to the upside or to the downside, it will be impossible for us to play the numbers game. So don't fall for that, please. Excuse me. Okay, so biggest volume of the day here on this NQ15 min. Doesn't really feel like it wants to be a short. Feels a little bit like a potential little trap capitulation type move. So is NQ, I did give us technically. What it's been, John, is it's been paint drying, and then all of a sudden it just like slaps you in the face. Kind of been the theme here a little bit. 0 for 2, down 700-ish. Find some sort of signal here. Yeah, it's just bouncing today. Annoying. Annoying like 4 or 5 candle stretch. So still just watching here, guys, right? Still just watching. Nothing going on here yet. trying to find, or I mean, not trying to find, waiting for a either high conviction reversal signal, right? So a green candle here at these lows to separate away from some of those bearish confirmations, or we're looking for those bulls to fail so that we can get that nice breakdown move and finally get the price action we've been waiting for. I'm being patient. Excuse me. Again, right, still being very patient here, waiting for some sort of high conviction signal. We've seen effectively setups here fail in both directions. So no reason to be hyper aggressive until we see some sort of change, right, or personality shift. Okay, watching CL here again. Can't really pull too much higher. All right, at most, you can go to 27. If it exceeds 27, then I won't be able to take this trade. Okay, so for now, right, stop loss would be 61.26. Entry would be on a breakdown under this blue line and then a retest of it. Okay, so now stop would have to be 61.27. Okay, now I can't take this trade. Cannot justify it from a risk reward perspective. That's why it failed. So it's a confirmation or an execution failure, I should say. No, the pullback technique is only in play if we haven't made a lower low, right? So this 3-min candle opened up immediately under the low of the confirmation candle. So I can't use the aggressive entry technique. There's a video inside the Discord that breaks down when to use which one. I believe it's called, let me find it here. Video number 6 in the Start Here channel, when to use the pullback versus aggressive entry technique. I would recommend reviewing that. Yeah, kind of bouncy, kind of annoying PA. A little bit. The stop losses I've taken here today have literally been like the fastest stop losses of the year. Funny how that works. Okay, so we got 40 seconds to go. See if this wants to go increasing outlier volume. There's a good chance. Yes, maybe less so. So we got a chance on both the 3 min here and the 5 min. It'll be effectively the same setup here regardless. 10 seconds. Should get there. All right, cool. So targeting high a day, approximately 144. So box in your trade, right? Best case scenario, 17 plus 25, right, would be your entry target then. So we'll call it like here, right? So that blue line, that would be 23 points. Can't really do the aggressive technique based on that sizing. And again, team, right? I am approximately 35 points away, right, from being green here on the session. That is not a big ask, right? Not a big ask from NQ. We've seen it give us that 35-point move here in the last minute. So please, right, don't force it. Our position sizing is here to make it easy for us to maintain green. Wow, that was a rapid. That was a rapid fuck you. Ooh, sorry to curse. That was a get fucked DTR candle right there. Woo. Okay, just chilling. Excuse me. Bouncy. So yeah, like I said, right, we need about 35 points from NQ to be green here on the day. It gave us a 100-point move in a minute. Right, and then the following candle there was 45 points. So we are very much in the game here, team, right? As long as we maintain our position sizing here and remain consistent with our risk reward requirements. Chasing here, getting impulsive, rushing an entry, taking an oversized loss will not make it easy for you to be green. That was a crazy candle. Excuse me. I think those fake outs would make me less tired. Excuse me. Yeah, kind of a crappy reaction to the range on both sides here so far. And it's funny, every time or since I've said that 35 points move, I feel like I keep seeing 35-point moves on NQ. But yeah, that works. How's everyone feeling? Everyone okay? Good, good. The market has it's been a band-aid ripper, right? I think like the timing of my stop losses here today, I can hold my breath for that long. Well, look, Deb, I would recommend constantly, right? Just reinforcing the same concepts that we talk about here on a daily basis. So trade your setup triggers, right? Box in your trades, work backward to find your entry price, and be responsible with your position sizing and your risk management. I don't see why that should change or would change. Right? Like no matter what, right? Trading is a numbers game, right? Fundamentally, it is a game of probabilities. And so the easiest way for you to stay on the correct side of probabilities is to keep your risk constant, right? To keep your risk number the same. And so that should continue to be the obsession, right? Choosing to not prioritize your position sizing or risk management is a guaranteed way to fail. Good, Jeremy. Yeah, fantastic, right? That's the way it should be. Because we're never one day away from feeling rich, right? That's unfortunately not how it works. But we're always one day away from compounding enough bad decisions to screw ourselves over. So just can't fall for the trap of needing to rush or needing to do whatever, right? Being one trade away from being back at all-time highs is really not a bad thing. And if you're feeling stressed, right? If you're feeling annoyed, if you're feeling tilted after today's trading experience, right? Then you need to think about your position sizing because something about that number is becoming hard for you to accept. So take the data, right, that the market is giving you and try to figure out why you don't feel calm or why you don't feel relaxed or whatever it is, right? If you're going to be a trader and you're motivated to turn this into your career, then I hate to be the bearer of bad news, but you are going to lose a lot, right? You're going to spend a tremendous amount of time losing. So if we make each loss feel personal or each loss triggers that like fight or flight survival mechanism, we don't stand a chance, right? Not to be discouraging, and certainly not the case here with my individual trading. Right? My portfolio's doing very, very well so far this year. But I was listening to the Market Wizard series, right? The audiobook there yesterday, and it was talking about a trader who was making millions and millions and millions of dollars, right? And he had 2 years in his 25-year career where he finished the year red. So everyone loses, guys, right? You could be a multi-millionaire, you could be a billionaire and still have a losing day, a losing month, a losing year. Please do not judge yourself based on your P&L. It is a guaranteed way to lose and to consistently feel empty. the most important concept in trading is that it is fundamentally the best loser that wins. And being a good loser doesn't mean avoiding losses. It means being excited about taking losses that are less than you expected, or taking losses that are a part of your rule. Right? Because no matter how you backtest, no matter how you look back at your trading, there is nothing that will give you 100% probability of working. We have to maintain that numbers game. Have to. And yeah, okay, it's annoying that I'm harping about this, right? Starting the day off 0-2. The way it goes, right? Over the course of 100 trades, so 100 trade sample size, yeah, and that's exactly it, Samuel, right? We have to avoid that size loss that makes us forget that it's much easier to recover, right? A small red day. So like here's a really good reminder, right? We have one from 2 weeks ago. So 2 weeks ago we had 2 red days in a week, right? Which was my worst week of the year. And I was down something like maybe $2,000, maybe $1,700 total drawdown. On the Monday after that weekend, we made that back all in one trade, right? Made back 2 days worth of drawdown with one decision. So if you focus on losing small, right? You focus on maintaining that control, and you focus on protecting that mental capital, tomorrow's another day, right? Always another opportunity. Market's always going to give us another chance. And yeah, you're going to get your butt kicked. You're going to lose. It's going to suck. It's going to feel like shit. But it's not personal. And if we make it personal, then it becomes catastrophic. Guaranteed. So I look at my P&L here chart for the year. If on each of these little periods of drawdown, right, the little pullbacks, I panicked and overreacted, man, I would have missed out on everything from, what day is that? We'll call that like early February to now, right? So it's a drop in the bucket as long as we ensure that it is so. But if we start to panic and overcorrect and overreact and now change our rules and go, oh, fuck, I got to make it all back here, won't work. You'll make it worse. Like maybe the analogy here, right, is that we're trying, if we're going to take losses, we're going to take little hits. We want them to be scabs, not lacerations, right? And if you pick out a scab for long enough, then you just keep bleeding, right? Keep bleeding, keep bleeding, keep bleeding. So again, right? Want to emphasize the best loser that wins. And by keeping your losses small, you increase your probability of being successful. And you increase it by like 100%. So the more that you judge yourself based on the quality of your process instead of your P&L on a day-to-day basis, I guarantee you will make a lot more money than if each day has to be a perfect P&L day for you to feel satisfied. Understood? And I will say, guys, right? The best edge that you can have as a trader isn't having the best strategy. It isn't some like specific prop firm. It's literally being the best at managing your risk and surviving when other people are making and compounding mistakes. If you can effectively just avoid those periods of self-sabotage, then you will survive an unlimited amount of paper cuts. And so, yeah, kind of a crappy bit of PA here for now. Yeah, I mean, Best Loser Wins is a great book. Highly recommend it. But like it's not like a book that's going to turn your mind or change your opinion on that. You have to want it, right? You have to want to be disciplined. You have to want to be structured. You have to want to separate away from the gamblers. And I will say that unfortunately, most people want the quick and immediate win more than they want the long-term result. They just can't delay their gratification for that extra day, extra hour, extra week. Need it now, now, now. And the market will always take that money. Always. Like it's ruthless at that. Whenever I need to make money, the market needs my money more. Nah, not enough volume here. Probably need to get down under this 61.12 too. Because like that would have to be my profit target, right? So just to get the risk reward towards low of day is probably not realistic. Yeah, it kind of seems like we're one candle up, one candle down at the moment. I'm not sure if there's a very obvious indication here of trending PA. Right. Yeah, still watching for a little bit. I'm not sure how much more energy I'll give the market if it's just going to keep staying stuck. I still can't get over the pace of this 1045 candle. That was nutty. An absolutely horrific type of maybe even capitulation, one could call it. Hey, nice work, Samuel. See again, right? You remain calm, you control your dopamine, you don't impulse it, and you can look at things rationally and make money. That's beautiful, right? You can't ask for anything else. So instead of like complicating the game for yourself, you actually made it easier. And that's the thing to focus on, right? If I can get a breakout from this range, then yeah, maybe I have an opportunity here just to basically retest high a day. 100 points to the upside. All right, it's plenty of space. To the downside here, it's kind of like step by step, and each step feels worse than the next. I'm probably less enthusiastic here about CL, probably a bit more enthusiastic here about NQ and ES. NQ may be the highest probability of finishing with that increasing outlier. I'm not convinced yet. Yeah, markets are closed on Friday. Yeah, we used to have a lo-fi playlist that'd be going on in the background, Samuel, but was voted out. Wow, Starbucks flying. And maybe do this. It is technically giving me a signal. The hop loss would be pretty tight, 15 points. It's pretty appealing. Let's keep an eye here. Effectively looking for that blue line, right, to act as support. So risking about 12 points. This could be a 2-contract position if it holds. Yeah, it's not the best volume in the world, Jeff. I would absolutely agree with you there. But it is giving me a signal. This is the signal I have back tested. So if I can get the correct reaction, I'd be interested. But with like extreme prejudice. Okay, so watching closely here still. Yeah, Samuel, I don't really find myself like craving trades that don't follow my rules, truth be told. Not to be like super egotistical. But like generally, right, my muscle memory is to just to play my system. Everything else is kind of secondary. I think one of the important realizations I had in my career here as a trader is that pretty much most of the thoughts I have intraday about my trading or the market, I simply cannot believe or trust. Like they're not thoughts that are designed to help me get better. They're generally thoughts to help me reward my dopamine. Right. And oftentimes in the market, you can make decisions, place trades, do whatever to get like a temporary relief of the anxiety that the market is giving you. I would say that's probably the most common thing I see with traders is they take position so that they don't feel the stress of waiting for their A+ setup. Didn't get the correct reaction I wanted there. It was kind of like it looked more bouncy than it did of like absorption. It's a shame, but that's okay. And we can look for a continuation here of that same signal. Doesn't have to change here too much. All right, high volume separation, breakout above our previous point of resistance. Very appealing. Now watch the speed here, right? That's probably a little bit too fast. Okay, so stop loss would be 19,061. No, it's a long, right? My red line here is at the bottom. Right? So if red line's at the bottom, that means I'm going long, right? In general, right? If I'm going long, the following or the candle before is going to be green. If I'm going short, the candle before is going to be red. So contextually, right, we should be able to determine that this is a long, not a short. Right? So red line stop loss, white line profit target. That's the technique we use for every single one of our trades. So we should be able to answer that. Yeah, it's got nothing to do with the videos though, right? We've talked about that red line being the stop loss. If that's at the bottom, that's a long. If it's at the top, right, it's a short. I've said that probably 5 times today. Okay, so now, right, we have a possible rejection thesis. All right, so red candle, right, at the moment. So we'd be looking for a short here, not a long. First thing we always find, right, is our stop loss price. That's the first thing that we're looking for. So where is my idea wrong if I jump into this trade? Then everything builds out from there. So I have very little sympathy in skipping that step. All right, we've talked about this a bunch here today, but every decision is made so that I am making it easy for myself to lose small, right? So I'm understanding the terms of my agreement that I'm buying, right? How much it's going to cost me, how much I'm going to lose, how much I'm going to make. And if I'm not happy with how much I'm going to lose, then why would I take that trade, right? And if I don't know how much I'm going to lose, why would I allow myself to be surprised by a result when being surprised is more likely to put me on tilt than not? Neither one of those things are like a way of protecting myself from myself, right? They're a way of lying to myself and saying, hey, I'm never going to be wrong again, so I don't need to worry about the downside risk. And if you want to get absolutely rocked as a trader, that's the way that you behave. If you actually want to make money as a trader, you do the opposite of what 99% of people are doing, which is plan out your trades, think about your position sizing, work backwards to your entry price, figure out your second trade before your first trade, right? So figure out where you get out before you figure out where you get in. So based on the current technique, right, I would need an entry of about 55, right, using the pullback entry technique. And this would be the pullback entry technique because this current candle has not made a lower low under our bearish confirmation, right? Now, if it does break down, then we're going to put our stop loss to be 39 and an entry of a retest of 19. Make sense? So I know what my second trade is going to be here on both the aggressive and pullback entry technique. Right? And I know that both will give me the opportunity to maintain my max loss number and maintain the position sizing requirements that I need. Okay, so stop loss right now would be 19,038.50. And we're looking for the aggressive because we've made a lower low prior to pulling back to our confirmation candle high. This is a bearish setup, short. Okay, so watching here closely, team, watching here closely. So far, these bounces around this blue line have been dramatic, so I'm being patient. Come on, come on. Again, if this thing sets up, I have an opportunity here on the 5-minute if I can't get my entry on the 3. Again, I don't have to rush this, right? Okay, now we're looking at a stop loss 21.75. Can't really pull back much more here now. Okay, no entry, right? Bad reaction here on that pullback into our potential entry zone. Didn't behave as if it was strong bears, so no interest. So, okay, maybe that wasn't a successful result, but we avoided a losing trade, right? By being deliberate with what we wanted to see from an entry perspective. And instead of chasing price action and now being super frustrated that we got stopped out, right? We avoided an obvious mistake and didn't make things worse. That's a positive, right? That's a good process win. Hey, I was able to talk myself out of a losing trade. If you're going to complain about that, then you have a self-sabotaging problem, not a trading problem. Right? So if I'm judging myself from a process perspective, I can't actually, at least not on like first glance here right now, have any examples of where I've broken a rule or taken a trade that I shouldn't have taken. Instead, okay, I took some losses, no big deal. My losses are 70%, right, of what my max loss would have been on those two trades. So that's a positive outcome, right? And I then haven't chased price action that's been bouncy, sticky, annoying, and made things worse. Which is, again, right, another positive. So if I'm thinking about things from a process-based perspective, those are winning habits. Those are good things. Okay, so again, maybe I have an opportunity here to target a move back up towards the highs. Stop loss would be the low, right, of our 1130 candle. So, excuse me, approximately 1900 or 19,000. So I know, right, if I want to be within my $500 max risk, I need to be buying at 19,025. I can't buy at that 34. So an entry, right, if I'm looking for a long here, is under that 19,025. And we've seen price action give us a liver shot, right? We've seen it give us a broken nose. We've seen it give us a little nut tap, right? So it's trying to be frustrating. It's trying to be annoying. It's trying to trick us into rushing. And so far, we've just seen reasons that, hey, we slow down our process. We avoid mistakes. So, okay, first attempt there at that 25. Not in a rush to chase it because I've just witnessed a tremendously violent fake out, which is like the third one I've seen here so far today. So I'm watching to see if price action wants to give me a different set of behaviors, right? And what we've seen here so far. If I see that difference, if I see that chill, then yes, I have a reason to play. If I don't, then I, again, have another reason to sit on hands and avoid obvious mistakes. So we're just taking the contextual clues that the market has given us, and we're using that, right, to beef up our intuition over how price action is behaving. So that was a very good defense there. That was a very, very good defense. So a little inside bar, right? We're still very much in play here, team. Very much in play. Be patient here. Be patient. Be patient, right? Okay, another avoided mistake, right? Now, maybe we could view this as like a little fake out. That's maybe a little bit aggressive. Again, right? Another losing trade avoided. Defined how we wanted to see price action behave. It didn't give us that reaction. So why be an aggressive asshole? Right? For lack of a better term. You don't need to be in a rush to lose money. That's no fun. This game is a lot more enjoyable when you can come back and trade with a clear head again tomorrow. And as much as I'm saying this for everyone just to be on the same page, right? So everyone has the same kind of like psychological foundation here. I'm doing this to remind myself as well, right? Not like your impulses go away. You just learn to not believe them or trust them. And so I'm acknowledging or saying these things out loud because it makes it easier for me to notice these patterns, right? And then adjust my behavior so that contextually, right, I'm not screwing myself over. Okay, we have an opportunity here on CL. Now, just the one thing that we have to sanity check here, I don't think it's going to be an issue, but yeah, we're fine. All right, so CL here, targeting a move towards 60.50, right? Our first pre-market level. And for now, this would be the pullback entry technique. And I'd be looking at a 601 entry price so that I'm within 10 cents of my stop loss, right? Otherwise, I'm going to have to wait for the aggressive entry technique. And stop loss here, 61.11. And so if we're looking at this, right, and we're saying that this is a setup here on a breakdown under 61, right? That blue line is there because we want to see 61 continue to act as support, right? So if bears are strong on this breakdown, then they're going to reload back up there at that price and push price action lower. So far, right, we're not getting that perfect reaction. Now that's much better. Right? Like that was nice and aggressive. Right? Be deliberate if you want to be profitable. We're going to take anything from today's session, right? That would be the thing to focus on. Don't expect yourself to get lucky. Okay, so still watching here, still watching. And if I get the aggressive with the stop loss of 60.99, that would also be appealing. No, and it's, yeah, like you need luck to make money in the market, then honestly, you've got better odds, right, of playing Baccarat. So at 61.01 to 61.10, how many cents is that? How many cents is it, Deb? From 61.01 to 61.10 is not 12 cents. 9 cents, right? How much is CL worth a contract? For each tick or for each penny that it moves? How much is it worth? Deb, I'm waiting for your answer. You want to try that again, Deb? It's $10 a point, right? Not 1,000, it's 10. So if I have 9 cents of risk and the contract moves $10 for every cent, how much risk do I have per contract? How much? Yeah, I'm waiting for Deb, guys. This is a question for Deb exclusively. We're all waiting for you, Deb. Come on. It's $90, right? So what's your max loss number that you're willing to accept per trade? Sweet. So based on that answer, how many contracts are you purchasing? Cool. So you answered your own question, right? Your position sizing is going to be based on your max loss number and your total daily drawdown, right? So I will tell you how many contracts I'm buying. I keep my max loss at $500. But if you're at a different position sizing, you need to be able to figure that out yourself so that you're not just saying, fuck it, I'll go more, right? And if we can't answer that ourselves, I will just ignore that question because it's too easy to figure that out individually. And truth be told, I can't remember what everyone's accounts are, how much drawdown they have, all these sort of things. So it's simply impossible for me to remember all of those specifics about each individual here. I simply cannot do that. So you need to be extremely selfish there with your position sizing and your risk management and understand how much things move. If you aren't, no one can save you, man. Okay, so still watching this CL. I'm not waiting for an overreaction. I'm waiting for price action to tell me something different than the last 3 candles. Right? We've had this setup candle now for 15-ish minutes and it hasn't broken down. So it's not that I'm looking for an overreaction. I'm looking for something that tells me that it's different than the last 15 minutes we've just watched. Right? All I've seen here from price action today is big move and it either gets stuck or it fakes out. So I'm looking for some sort of indication, right, that price action is behaving differently than what we've seen here so far all day. Because if we're just seeing it bounce as is, can I buy that 6101? Great. I'm up 5 cents. But it's like follow through is to 93. It's not worth it, right? Like there's nothing there that's telling me enthusiasm, right? High conviction, whatever. So it's just not giving me conditions where it rewards super aggressive behaviors. Been punished twice for being aggressive, right? So I would much rather, right, be more deliberate, more specific, and wait till I cannot talk myself out of it any longer. I can maybe look at an NQ breakdown here as well. right? Broke down under 900, increasing outlier volume. So I'm watching this NQ. Too fast on this pullback, right? Too fast. Want to see this previous low act as support. And again, another loss avoided. Okay, so back to watching CL. Okay, so still watching here. What a reversal on NQ. Holy. Okay, so I'm back to watching NQ here to the upside. And if this thing breaks down, right, then we'll play the aggressive entry technique with an entry around 91 cents, right? So stop loss would have to be 60.99, right? 8 cents of risk, 80 points a contract, or $80 a contract. Do the math, right? Type in, figure out how much you're losing. You don't like that number, size down. Trading is not a game where you can ask for forgiveness after you've made a decision, right? You have to be proactive, not reactive. Maybe do this as well. 97 stop. All right, so now I'd be risking about 5 cents. And I can buy a few more contracts, right? The reason, right, we haven't clicked submit here on an entry because it didn't make a lower low and give us the aggressive entry technique. So this still maintains the pullback logic. And now stop loss would be 61.05. And give it a second. This candle closes in 5 seconds. Let's see if it stays as an inside bar. Cool. A little bit too bouncy here. Okay, so back to watching NQ. Long. Stop loss, right? 19043. And you're looking at one contract, right? And we need an entry under 68. All right, guys. So I am in after all that. One contract, 6650 long. Right? Green signifies that it's long. And so far, so good. So let's see if this thing can give me some oomph, right? Decent follow through and get some joy. A little bit slower reaction than I maybe would have wanted here. Gotta run. Gotta run. Okay, keep pushing here. Keep pushing. There we go. See if we can get through 80. That's going to be our next point of resistance that we want to fly through. It's making me work here. Making me work. Come on. 5 more points. Okay, so again, watching this reaction here around 80, right? This is where we want to see it get up and over. We seem to keep getting stuck around 76, 75. How did I get stopped out there? I didn't hit 43. What I'm trying to figure out here is if I have a good short opportunity. Effectively the range bound trade. Yeah, I would think so too. I would definitely think so too. I think realistically, over 3 on the day, I'm not going to force anything else. Keep the loss small. Any questions here, team? Kind of a frustrating day. Yeah, very, very choppy day. Did a pretty good job managing P&L. But yeah, definitely gave back a little bit here. Right. There we go. So a little bit of a pullback here today. That's all right. Little retest of 500 and we go. Any other questions here, team? Anything else you guys want to go over? All right, guys. Well, same deal like always, right? If you have any questions, hit me up outside of market hours. I'll do my best to get back to you as soon as I can. First little red day here in a while. That's a little bit annoying. Unfortunately, right? It is just a part of the game. So if I go 1, 2, 3, 4, 5, 6 green days in a row, and then a red day, 6 green days and a red day, 6 green days and a red day, I'm gonna be okay. And stats still really strong here for the year, sitting at about a year-to-date return of 144%. I can't really complain about that. So all things considered, could have been a lot worse here today. Kept the losses small. It lost a little bit over $1,000, which is not the best feeling in the world, but it's less than my expected max loss of 1,500 from 3 losing plays in a row. And so that's okay, a positive to take from it. To be determined if I felt like I broke any rules here today. I don't really think I did, but I'll review my trades here once markets close and do that analysis. But yeah, it is unfortunately a part of the game. So a little bit chopped out here today. Yeah, nothing really too optimistic to say besides that. But yeah, we'll be back at it again here. So same deal like always, team, right? If you have any questions, hit me up outside of market hours, and I'll do my best to get back to you as soon as I can. Otherwise, have yourselves a fantastic session, and we'll talk soon.